You ever have that moment late at night when you open your banking app for no real reason? You scroll for a few seconds. You look at the number. It's not terrible. It's not amazing. It's just there. And then you think to yourself, I should probably be investing. I should be doing something. But then another thought sneaks in. Does it even matter if I only have $100? It feels small, almost pointless, like bringing a cup of water to a forest fire. So you close the app. You tell yourself you'll start when you have more, when life is calmer, when income is higher, when you feel more ready. But what if $100 a month for 10 years is not small at all? What if the real story isn't about the money, but about who you become in the process? Most people misunderstand investing because they think it's about intensity. They imagine someone throwing thousands into the market, watching charts every day, timing entries, talking about diversification strategies at dinner like it's a personality trait. And if you can't do that, it feels like you're not really investing. But that's not how wealth quietly grows. The uncomfortable truth is that most financial progress isn't dramatic. It's repetitive, boring, almost invisible. And because it's invisible, we underestimate it. Let's do the math gently. If you invest $100 every month for 10 years, that's $1,200 a year. Over a decade, you've contributed $12,000. Now, here's where psychology kicks in. If that money grows at an average of around 7% per year, which historically has been a reasonable long-term return for diversified stock market investing, though never guaranteed, you don't just end up with $12,000. You end up closer to $17,000. Not because you worked harder, not because you picked the perfect stock, but because time quietly did some of the lifting. $5,000 in growth doesn't sound like a lottery win, but pause for a second. That growth didn't come from extra hours at work. It didn't come from negotiating a raise. It didn't come from side hustling on weekends. It came from a decision you made once and repeated calmly. And here's the part people miss. The money isn't the biggest transformation. Because when you invest $100 a month, you're not just building a portfolio, you're building identity. You're telling yourself, I am someone who plans ahead. You're telling your future self, I've got you. And that changes how you think about everything else. You start to look at purchases differently. That $100 dinner out isn't just dinner anymore. It's 10 years of compounding. The impulse buy feels different. Not forbidden, just heavier. Not because you're cheap, but because you've seen what patience can do. There's something powerful about watching money grow without your constant involvement. It reduces this low-level anxiety most of us carry, the background stress of what if something goes wrong. An emergency fund helps, yes. Having 3 to 6 months of expenses saved creates breathing room. But investing adds a different kind of calm. It shifts you from surviving to building, and that psychological shift is subtle. At first, your account barely moves. You might check it and think, that's it? The market goes up, then it drops. Sometimes it drops hard, and that's where most people quit, not because $100 was too little, but because volatility feels personal. We forget that markets move like weather. Storms don't mean the climate is broken. The real advantage of investing $100 monthly is that it's small enough to survive the emotional swings. If you're investing $5,000 a month and the market drops 20%, that hurts in your chest. If you're investing $100 and the market drops, it's uncomfortable, but survivable. Consistency thrives when the stakes feel manageable, and that's why small is powerful. Now, let's zoom out. 10 years might feel long, especially if you're in your 20s or 30s. A decade sounds like another lifetime. But think about the last 10 years. They passed anyway. Jobs changed. Friends moved. Prices went up. You evolved. Time moves whether you participate intentionally or not. The real question isn't, can I afford $100? It's, who will I be in 10 years if I never start? Because here's the quiet math no one talks about. If you start at 25 and invest $100 monthly for 10 years, you've built not just $17,000, you've built momentum. If you then increase that to $200 or $300 later, the compounding engine is already running. If you wait until 35 to start, you're not behind because you're irresponsible. Life happens. But you've lost a decade of growth that can't be replaced with effort alone. Money responds to time more than intensity. That's uncomfortable in a culture obsessed with speed. We want fast gains, big leaps, breakthrough moments. But wealth for most ordinary people looks like this. Quiet deposits, ignored noise, boring patience, and psychologically that's hard. Because nothing about it feels urgent. There's no applause for investing $100. No one congratulates you. No one sees it. It's just you and a decision. Repeated 120 times over 10 years. That repetition builds discipline in a way extreme budgeting never could. You don't need to cut out every coffee. You don't need to track every cent. You just need to automate one decision. Automation is underrated. When the $100 leaves your account automatically each month, you stop negotiating with yourself. You remove willpower from the equation. And here's something subtle. When you know you're investing monthly, you start to think longer term in other areas of life. Career decisions become less desperate. You don't cling to toxic jobs as tightly. Optionality is freedom's quieter cousin. You may not be financially independent in 10 years from $100 a month alone, but you've created space. And space reduces panic. Let's also be honest about limitations. $100 a month will not make you a millionaire in 10 years. It won't replace your income. It won't eliminate all money stress. And that's okay, because the goal isn't overnight transformation. It's trajectory. If your financial life today feels chaotic, no savings, no plan, constant stress, then $100 monthly is a stabilizer. It's proof that you can direct your money instead of reacting to it. And once you prove that to yourself, you can scale it. Maybe after a raise, you bump it to $150. Maybe you invest tax refunds. Maybe you learn more about index funds, diversification, long-term allocation. But none of that matters if you never start. The first $100 isn't about returns. It's about friction. You're reducing the friction between intention and action. Now, imagine this. It's 10 years from today. You open your investment account. You see $17,000. That number represents more than money. It represents 120 months where you kept a promise to yourself. There were probably months you didn't feel like it, months when expenses were tight, months when the market looked scary. But you continued. That continuity builds confidence. You approach raises differently. You negotiate rent differently. You think about housing, lifestyle, and risk differently. You stop asking, can I get rich fast? And you start asking, how do I build steady? That question changes everything, because steady compounds in ways extreme never can. If you're feeling behind right now, pause. You don't need to fix your entire financial life this month. You don't need to understand every investing strategy. You don't need to predict the market. You just need to decide whether future you deserves $100 worth of belief. That's what this really is. Belief expressed in dollars. Small, consistent belief. And here's something comforting. Even if returns are lower than 7%, even if markets underperform, even if life interrupts you occasionally, the habit still pays you. Because someone who invests monthly for 10 years doesn't think the same way as someone who doesn't. They've trained patience. They've trained restraint. They've trained long-term thinking. And in a world optimized for impulse, that's rare. So what if you invested $100 monthly for 10 years? You'd likely have around $17,000. But more importantly, you'd have a decade of evidence that you are capable of building slowly. You'd have less anxiety about the future, more respect for time, more awareness of trade-offs. You wouldn't feel rich overnight, but you might feel steady. And sometimes steady is enough, because progress doesn't need to be fast, loud, to be powerful. It just needs to continue. Start small. Stay consistent. Let time do what it has always done. Move forward quietly. And let compounding, financially and psychologically, work in the background while you live your life. If you liked the video, then like it and subscribe so you don't miss the next ones.